how did you get into rock metal? Yes.
Whew, buddy.
And who's your favorite?
Oh, that's, can we dedicate the whole podcast to that? No. So, short story is my dad and I used to drive to soccer games, and he was into Metallica and Pantera and things like that. And so, did that back when CDs were really, you know, popular. We'd pop one CD in and rock out together when I was probably 10 or 12, and it was like, oh, okay, like, this is cool. Like, I got away from Backstreet Boys and whatever, you know, Criss Cross and all that, like early hip hop. And it's like that. I entered into like my, you know, kind of phase of entering into young adulthood, and then it stuck with me. And I don't know, it's like as I've gotten older, I've gotten more into it. It's kind of weird. Like it's some nostalgia, but connection to your youth and all that stuff.
The other day, my wife, the family, we were driving back from Colorado. And my wife asked me a question. It's like, hey, what type of music did you used to listen in high school? And I was like, you know what? You've never asked me that.
Yeah. Oh, man, I feel like that's like date 101 stuff, man. Okay.
No. And I was like, I'll put it on. And I'll put in Primus, Metallica, Tool.
Well, by the way, Tool is the answer to is my favorite band.
Oh, yeah?
Just saw them on the 31st at the AAC.
Aren't they amazing?
Incredible. That's probably the 12th time I've seen them. So, all right. So now this is the moment we've been waiting for, where it's like, we connected over Tool. We're good. We're buddies.
We're good, yeah. And my wife's like, who's this person? I was like, I've never heard you listen to this type of music. I was like, I know. It's like, I don't know. I just.
Wait, so you hidden it from her, not intentionally probably, but she didn't know that part exists. My wife is like annoyed at how like we have to do Kids Bop, and then I'll always be like, hey guys, can we listen to Daddy's Metal? And they're like, no. But the other day I finally convinced my daughter to let me play Tool, and I played the song The Pot, and she loved it. And I'm just kind of like, I'm taking her through the whole journey of the song as it's going, and the next day she's like, Daddy, can we listen to that cool rock song again?
Yeah.
Yes. I did it. No more, hopefully no more Kids Bop here soon.
Well, I have to be careful with my daughter because she retains everything.
Yeah.
Unlike me. And I have to be careful what I say, how we say it, because she will just go tell everybody, and I don't want to.
Well, and by the way, I'm going to take creative license. I'm going to include this. This will be the start of our podcast, by the way. We're going to include the talk about Tool. But Jorge, why don't we officially kick this thing off? I'll say hello to you and greet you, man. But Jorge Arzate is how you say it, correct? And you're the CEO, founder of MAKINA Benefits. So
that is correct.
Thank you so much for coming down, man. I appreciate you very much.
Yeah, thanks for having me. It's an honor. I mean, I've been following your podcast for, almost 4 months now. You know?
Nice.
And you've had a couple of guests that I've had very good relationships with, and so that is just very interesting to see their growth and evolution as well.
Well, that's really cool, man. You forget sometimes that even though there's millions of people that technically work in the insurance industry, that it's still relatively small.
It's such
like
a small world.
The circle is pretty small. Obviously, you never know who you're connected with through second or third connections and stuff like that. But that's cool to hear, man, and I appreciate you. Appreciate you also coming down from Tulsa, right?
From Tulsa.
Was that a 5-ish hour drive or so?
No, it's an easy 3.5 hour drive for me.
Okay. That's because you got your foot on the gas the whole way.
I'm not gonna say no to that. So. I'm in Tulsa right now. Spent close to 10, 12 years in Austin, Texas.
Okay.
After we moved there, made the transition to Tulsa, and obviously all my friends that heard me say Tulsa, they make fun of me.
Yeah.
Because I'm in Tulsa. Well, Texans, you know how we are, man. If you're not in Texas, we're going to make fun of you.
Yeah, for sure.
I don't care if you're in the promised land.
Well, I'm in Texas, but I'm in Prosper, like 45 minutes from the border. I have friends in Austin that make fun of me that I'm basically in Oklahoma because I'm so far. Yeah, so like even if I'm still in Texas and they're giving me a hard time.
Like I say, even if you're in the promised land, they're going to make fun of you. So yeah. But
I didn't even know what the true heart of Texas is for true Texans, but I always thought Dallas-Fort Worth was at least part of that. But Prosper is 45 minutes north of Dallas, so like for some people you might as well be in Oklahoma.
Correct.
Don't visit me anymore because it's so far away. Like, come on, Dad. But that's just Texas for you. So I do want to get to know your backstory a little bit, but while we're on that subject, I do want to hear the transition from Austin to Tulsa. What sort of precipitated that? I know some of that was COVID related. So could you share that story with us?
Yeah, absolutely. When we made the transition from independent brokerage, independent advisors, healthcare advisors, into becoming a TPA. I was in Scottsdale back in 2017 fourth quarter, visiting our, developing our current relationship with our actuarial team. And the CEO, Mark Lewandowski of Benveo, we had met there, and it was a brand new relationship. And Benveo, a TPA, a third-party administrator, they are from Tulsa.
Okay.
And through some acquaintances, we had come together and met, and he introduced me to our underwriting team. We were in Scottsdale, the fourth quarter, okay? This is October 2017, busiest season of our,
Of course,
of our business. And I fired over the phone our current back office support, another TPA. And that night in Scottsdale, my wife and I were having dinner with Mark, brand new relationship. And I just told Mark, I was like, hey, can you take 200 groups? And he said, no. And I rephrased, my statement. Well, the question, I was like, no, Mark, I'm bringing you to.
Yeah. Whether you like it or not. Okay, we'll figure this out. Yeah.
So we bring all these groups to him, and wonderful working relationship with them. It got to the point to where we grew exponentially, came to a point that either they acquired us or we acquired them, and or figure out some type of merger, and that's what happened. It was a partial acquisition, a merger. That's when the pandemic hit. And I didn't want to be on a plane going back and forth because we didn't, the flights were canceled. We didn't know what this pandemic was all about. And I didn't want to be driving 7 hours each time.
Yeah, because for Austin to Tulsa, that's a drive.
It is a drive. So we made the decision as a family to transition into Tulsa. And you know what? It's grown on us. It's really has. It reminds me of Austin back in 2008.
Okay.
It's got this, energy
that
you can't really put your finger on. And now it's coming into the national view of, we're getting the PGA Tour this year there, and Tesla was scouting us out and all that stuff. So, but I tell everybody, I was there first before Tesla. So.
Yeah, there before it was cool, right? Before Elon Musk. That's funny. So Tulsa, though, the vibe you guys like, family transition has been good. So you spend most of your time there nowadays, and then, or
most of the time is there.
I know you're on your way back to Austin tomorrow, though, right?
Correct.
Okay.
Yeah, and tonight we're spending some time with a large broker relationship that we have here in McKinney, and or Allen. I don't know. I get confused by these.
It's all the same.
These towns, and we're back in the road tomorrow.
Man, well, I appreciate you obviously incorporating this in your schedule. So let's go further back in your backstory. Before we get into the MAKINA benefits, I definitely want to hear that whole story. And obviously you have some other really cool things I think that are interesting to talk about. But let's go way back. Let's go some of your origin stories, your inception story, if you will. As much as you want to share, I know you told me you grew up in El Paso and we bonded over soccer. So let's hear some of that.
Actually, across the border in Mexico, in Juarez, one of the most dangerous cities in the world back then. And at one point in my life, we were in the most dangerous part of town, of the most dangerous city in the world. And but it wasn't as bad back then. Living in a border town, it's very transitional. It's very easy to be in the U.S. and in Mexico. So you kind of have these, it opens up your horizon of, hey, we're going to be in the U.S. today, and then we're going to be in Mexico the next day, and or vice versa, in the same day, going back and forth. Did go to high school in El Paso. Then from there I transitioned to UTEP, Go Miners. 2 years there, dropped out of college, and decided to join the Coast Guard. I was a bosun's mate. I was training for search and rescue in the Coast Guard. Loved it. It was amazing, but the pay was horrible. Put in my time, serving my country, and decided to, to put my skills in the marketplace.
And where were you stationed when you worked for the Coast Guard?
Cape May, New Jersey. Most of the time. Then my last duty station was in Sallisaw, Oklahoma. Believe it or not, with the Coast Guard.
And what body of water was there then?
Well, it's the second largest navigational channel in the U.S.
Okay.
So you have the Mississippi coming up, and then it goes into the Arkansas River, which ends, it goes all the way up almost into Canada.
Yeah.
So.
Well, naively, I assume Coast Guard means, coastal, but obviously that's not.
Any large body of water.
Okay.
Yeah.
Because I had a buddy that after high school went in the Coast Guard, but he spent time in Alaska and I think San Diego and a couple of
those are the cool places.
Those are the cool places. Yeah. Maybe just he got the luck of the draw there. But so then you get out of the Coast Guard, right? What's next for you? Like obviously
we're talking. That was a big question, right? It's like, okay, what's next? Obviously, newly married. My wife and I, we've been together now for 23 years. Amazing person. I don't know how she puts up with me, really, because I'm a tough person to be with. I'm just going to be completely transparent. A very difficult.
Well, we spent an hour and a half together so far.
Correct.
Like I haven't picked up on any of that. But maybe
No, I am. But she's done a tremendous job of really managing the relationship and just being there as a support system. And so the question was, what's next, right? And I didn't know. You can't just really come out of the Coast Guard and say, I'm just going to go drive a boat and be away from my family 6 months out of the year, which we do get recruited a lot for yachts, cruises, and all that, because we're highly skilled, highly trained. And so we're recruited quite a bit.
Okay.
But it's more for single life, or a life that you don't want to really be home. It's more of a calling.
Okay.
So I put my skills back in the marketplace. I was recruited by my first insurance company, Bankers Life, doing door-to-door sales, and very young, 22-year-old.
I mean, was it literally door to door at the time, knocking on doors?
It was a lot of cold calling.
Cold calling, okay.
So you would call them, our schedule was call them Friday, book 15 appointments, and what you couldn't actually book, then you go out on the streets and you just pound the street, and I hated it, every minute of it. But became very successful at that. From there, I went into management.
Okay.
I was recruited into, not with Bankers, but into corporate with another company, and that's where my executive track begun.
Okay.
Yeah.
So executive track, they were obviously sort of grooming you for an executive position. Is that what, it's a formal training program with
that company,
distinct timeline and things like that? Okay.
Yes, very structured. You have a career track once you actually go into corporate and home office. A lot of training, a lot of mentorship, a lot of leadership. You see, you really experience what to do and what not to do.
Okay.
Also, with those types of positions, and it came to a point to where I found myself burned out after reaching several of my goals, and that's when I decided to venture out on my own.
Well, as I say, is there, I know some people go through this where there's a certain amount of sort of predictability of the future, right? You're on this track and it's moving in the right direction and you know where you're going to be 5 and 10 years from now, and it's almost like there's a part of you of the unknown that is missing, right? And so did some of that kind of stimulate this need to want to go out and venture out and build a business on your own?
No, it was truly just being tired of just burning the candle both ends.
Yeah.
I was young, my hair was on fire. It was all about climbing that ladder, traveling a lot. And I just came to a point to where that culture did not fit me. Okay. And my goals and aspirations that I have for myself.
Well, you said didn't you say you looked back and you were on 192 planes one year or something?
2012.
2012?
Correct. Okay. I was on 192 planes.
Did you track the miles? Like how many hundreds of thousands of miles of that?
It was, as you can imagine. I mean,
isn't there some club where if you get 1 million miles or something like that?
The $1 Million Mile Club.
Okay.
I didn't reach that. But I was pretty close.
Pretty close.
Yeah.
But I mean, the physical toll, right? I mean, obviously, I think this was prior to your daughter being born, correct? But still the physical toll that's being taken on your body, mentally. We talked about expense accounts and things like that over lunch, where it's like, man, all your entire being surrounds around representing this company on a plane, and it's just the wear and tear that it puts on you is...
It's a beat down.
It is a beat down. Yeah, I mean, that's a good way to put it, a simple way to put it. It's a beat down. So it got too much, right? It got too much for you. Okay.
Yeah, and it's affecting my family life, my personal life, my mental life, my physical life. And I'm very thankful that I was able to recognize, the red flags. And I'm very thankful that I had a good support system to call me out on it. And also having the fortitude to say, hey, listen, I'm done. Because a lot of people, they're not in that place where they can just say, hey, I'm done. I'm just going to start my own business and I'll see what happens.
Yeah.
So I was very fortunate at that time.
Well, it's good. And you and I were talking prior to this, you had that ability to reflect and to acknowledge that, hey, this is getting too much and I'm not coping with it properly. I mean, I shared with you that post I had last week about this idea of we get to a breaking point, or we get to this point where we don't know what to do, and some very successful looking people on the outside end up having these sort of spectacular downfalls because there's demons, there's ego that's unchecked, there's not an outlet. So what was it for you that you were able to successfully navigate a transition like that and not let it get to truly burn you out?
Taking a risk
of
the unknown, because you're leaving a life of comfort. Those positions are very well paid, right? It was funny because I remember being on a flight with an executive from Berkshire Hathaway. And I was just asking him questions about how they navigate, finding executives and whatnot. And he was very interested that he said, hey, finding talent is not hard. Is finding that talent that has enough bandwidth is what is hard.
Okay.
Because we know that when we hire a certain CEO, a certain executive, we have about a 3 to 5 year runway with them before we have to find another one, because of how difficult it is.
Yeah, the pressure, I can imagine.
The pressure about it, and how they grind you and how they just work you.
Yeah, I felt some of that early on in my sales career when you're constantly chasing a goal that would restart itself, right?
Correct.
It's like, I had a really good year, and then you turn the page on the calendar to January 1 and you start back at 0, and everybody's on the same page as well, right? So everybody has different goals and their metrics they're trying to hit, but we all start over again, and the pressure is like, all right, well, the end of next year you have to be at your goal, and it's just the continual or perpetual grind towards that sometimes becomes untenable to certain people. And I told you, I saw kind of the future of what my life could be in there, and it was a great life, but also obviously not without downsides.
Correct. And it's interesting you say that when it's just goal driven. We talk about this, and it wasn't until a friend of mine asked me a question about, have you ever really stopped and put thought about designing your life?
Designing your life. Okay.
Design your life. And so that question pondered with me. It's like, okay, design your life. How do you do that? What does it mean? And we also talked about being goal-driven, goal-oriented, versus being growth-oriented. And you hit the nail on the head, is that every year, if you're just goal-driven, you're going to have to reset. But if you're growth-driven, it's a journey. It's a lifelong quest.
Well, that's true, right? Because the growth would suggest that there is not really a starting and ending point. It's kind of this continual process where maybe you take stock at periods of time and look back and recognize the growth that's happened, but it doesn't end. You don't just flip the switch and go, oh, I grew now and I'm grown.
I'm out of the diaper.
Well, I like that kind of shifting the mindset, because you're still working towards things. You are working to be better, bigger sales, whatever, building a business.
You still need to have some goals.
Yeah.
But they're just milestones.
Okay.
They're not
just a marker on the road.
It's just a marker on the road, and it's different than making that your endpoint. That's why we see a lot of people that get to the summit and they go like, what now?
Or even that what now, or I think some of it is like, oh, that's it? Like I'm here.
Exactly.
Like, is this what I was working towards? It's not, I don't feel like I thought I'd feel having
Correct.
achieved this, or now I've achieved this certain goal and everything in my life just didn't fall into place and everything's fixed and I have this perfect life. Like, I think it's, perhaps sometimes it's a letdown to certain people that they achieve a certain level of success and they go, well, if this was everything that I expected it, well, maybe I'm going to sabotage it, like subconsciously, just because I need to start over again and start building again. And I don't think that's a healthy way to go about it, but I think it maybe explains some of that.
Yeah, correct. And just like I said, you know, when you are growth driven, you're more happy, you're more relaxed. You know, just with any company, when you see a growing company, like I said, you see a happy company. When you see a growing person, you see a fairly decent, happy person also. You know, so if you continue with that, your growth, you're intentional about designing your life, you're intentional about your growth pattern, you're intentional about your priorities in life, then your goals are going to be measured against that.
Okay.
And once you have your priorities, then you can actually figure out what sacrifice you're willing to make to reach that goal.
Okay.
Rather than sacrificing everything to achieve that goal and letting everything else fall behind.
But see, that's a deeper level of perspective, right? Like if you go step back and recognize, well, I want to achieve X. What is it going to look like to get there? What do I have to give up potentially to get there? If I'm willing to give up or make the sacrifice, like you said, to achieve that, and both of those things are aligned, well, then you know you're probably on the right track towards growth.
Correct.
But if you don't recognize, well, what is that sacrifice, and you don't realize how perhaps detrimental to your life it could be to achieve that, you get blindsided by it.
Correct.
And then you fail, and also maybe some other parts of your life fall apart at the same time. And, and I don't know why I've been on this like kick thinking about this, but when you start thinking about your legacy, we talked about legacy over lunch. Like you just want to make sure that whatever that end is, or whatever that goal or the growth that you're trying to get to, is that you don't figuratively or literally kill yourself in the process at the same time. And I'm just trying to have that sort of perspective as I go through this, my own personal journey as well. Maybe learning from some others that have come before me and maybe didn't do it in the most optimal way. Yeah.
Yes, that's true.
Well, so I do want to make sure we don't gloss over it. That was I'm glad we got in this track, man, for sure. But MAKINA benefits. I want to understand, at least if you don't mind taking a couple.
Yeah, absolutely.
MAKINA. I keep wanting to say MAKINA because I'm thinking of the what is the literary term like Deus ex machina? It's like when something in a movie comes up and changes the plot. So MAKINA benefits. I'll make sure I say that right. So tell me a little bit more about what you guys are doing today.
Yeah, very simply put, we are an independent boutique TPA.
Okay.
Truly independent, autonomous. We have three main functions that we operate in. Number one is bringing level-funded plans to small to medium-sized business owners. That's the main thing. The second is that we offer back office support to other TPAs as well. Due to the fact that we have spent a tremendous amount of resources in our infrastructure, in the technology that we have to run and operate as a TPA, we're able to offer that support to other TPAs as well. So we have two other TPAs that we're involved with. And the third one is consolidated billing. You know, sometimes we're totally dependent upon independent brokers, independent advisors. They trust us enough to bring us their accounts or at least to quote their accounts. And sometimes these independent brokers will place 4 or 5 carriers with one group. Well, then you have the HR department just spinning, trying to reconcile all these bills. So we do reconcile that for them. And we bring those services to them. So it's a small part of our business, but it's growing more and more as we get the word out there. And MAKINA basically was born out of the necessity or the desire rather to bring a solution to these small to medium-sized business owners. Man, they're just getting squeezed, by the bucas that we talk about, and there's really no solution for them out there. And a lot of the brokers they just tend to, because they're smaller in size, they just don't pay as much attention to them as bigger accounts. They can be more profitable. But more and more, we have a lot of these brokers that are paying more attention to them. We bring those creative plans. We put them in their hands so that they can go out there and offer solutions for their clients.
Well, now I know even on your website, I noticed you use the terminology boutique. Which I think obviously is intentional, right? But
Correct.
I mean, what does that mean to you by being a boutique TPA? How does that sort of differentiate yourself from the larger, or maybe carrier-affiliated TPAs that are out there? Nothing wrong with that, but like, how does that kind of position with you and who your customer base is?
We're not everything for everyone. Our products are not going to fit in every situation, and that's okay. That is very okay. We are small in scale. We have been bootstrapping this from inception. We don't have anyone telling us how fast we need to run, how high we need to jump. It's been very strategic. It's been nerve-wracking at times. That's enabled us to really develop core relationships with our underwriting team. We only use one underwriting team because we get very creative with them. They trust us. Our block of business is running profitable. I think the last report that we had on our block of business was running at a 38% profitability. And these are small groups. These are level-funded small groups. But they're very strategic, right? We only use a handful of stop-loss carriers. And so being a boutique means that, hey, we're going to cater to the needs of our block of business. We're not going to go and grow beyond what we could actually handle. Also with that, it means that customer service is very important for us. I can bet you right now that if you call our 1-800 number, we're going to answer hello. It's going to be a live person. And that's very important, because of the nature of the plans that we have. RVP plans are very, very, very heavy administrative-wise. And the end user, they need that hand to be held. So our staff, they do a wonderful, wonderful job. Tisha, our head of service, she is just amazing in training her staff and just taking care of the members, and I just love it.
Well, I appreciate that you guys are targeting this space. I've talked about this a number of times, that I think that small to medium size, let's call them, 30, 40, 50, up to a few hundred lives employers are rife for opportunity for consultants that are willing to look a little bit outside the box. The solutions are there.
Correct.
You just have to dig a little bit further or find trusted partners that know how to kind of do it, have a turnkey option for you.
And what we do is that we essentially just put a level funded plan in a box.
Okay.
And we give you 3 or 4 options. We know how to manage them well. And here you go.
Well, but it does, see, what I like about that, and not necessarily just your solution, but I like about the idea of this solution is, well, you have the carrier option in a box, and you get the carrier option. You also have this, like, well, let's go partially self-funded. Let's pick all our vendors. I got to have all these relationships. I got to know how all these pieces work together. Or there's a step in between, which is, I think, where you guys fit, was there's some customization, some flexibility, but there's still structure to it. It is productized, so you can purchase it. And so I think that offers, especially in that space where the advisors might have 100 of these 50 life employers that don't have the time to go do everything on their own, but they know there's something better than perhaps just an off-the-shelf carrier plan.
Spencer, you're right on it. These employers, they don't have the manpower to go out there and create their own plans. These brokers, these independent brokers, they don't have the time to put all those pieces together. So we have decided to be in that niche market and to bring the best product and the best support that we can for these groups.
But I mean, it is a niche market, but also I think it's a humongous niche, right?
Yeah.
Like, I don't think it's as small as sometimes people think, and it is. You have, I know agencies here locally that have built their entire block of business solely in that size segment because it's a little bit under the radar of the alphabet shops. And then it's a little above maybe the mom and pop style agencies that are more individualized healthcare or have a couple groups, but most of their stuff is smaller than that. There's this humongous subsection of the population that fits in that small to medium-sized business that have, there's tremendous opportunity, but also the solutions are available as well. I don't think you have to get stuck in a bucket. Oh, well, I'm a little too small for all these. No, that's actually that's not the case at all.
And when I talked about the block being profitable, I don't mean like us being that profitable. Thankfully, we have been profitable. But when I talk about profitability, that translates to real dollars in the hands of the employer. We just went through 2 of the most difficult years, since the Depression, when we talk about small business owners. When you go back, when you have an independent broker, we call them up and say, hey, X account has a refund check of $58,000. And they go back and they actually hand the employer a $58,000 check. In these times, I mean, that is, I can't help but just fill myself with pride, not because I'm the founder or I'm the CEO of the company, but the team that is around me, the claims department, the operations, our VP of Josh that develops all of our relationships with our vendors, and how much ownership they take on that. Because they know that, hey, we're a small business also. And we actually use the same plan. So we protect our family with that. And to be able to actually give back to the community, our business community, in that way, there's no...
Well, it's not even just about the money, which of course is great to hand them a check, back. It's also the message that sends to the employee base, right, of, hey, we're taking back control of our plan. We're maybe able to offer richer benefits at a lower cost. Or, hey, look, our renewal is flat or maybe even negative next year. Like, what? Like, some people would be shocked that you can offer better benefits and still lower the cost curve at the same time if you do it correctly.
And that's another thing, developing a relationship with the underwriting team and developing the relationship with only a handful of stop-loss carriers. The way that we underwrite a team, obviously we can't control the claims that are going to come in the future, right? But we really try to underwrite the team for the employer for the next 5 years.
Okay.
Not to say that they're not going to have a rate increase, but we really want to look at the entire picture, because we want to get as close as possible to giving them a level premium for the next 5 years.
Okay.
So far, I would say 85% of our block of business has received either a 1 or a 3% increase in their premium. And we have about 95% retention rate year over year.
Yeah.
And we're on our 3rd year now with these, some of our clients with these level funded plans. And that's just very rewarding, because how tedious is it to go out there and have to re-enroll a group year over year and have to find a solution year after year after year.
Well, and I've always been of the mindset, like you, that the self-funded, especially groups that transition from fully insured to level funded or self-funded, that it has to be a multi-year game plan. Like if it's 3 or 5 or beyond, I mean, obviously sometimes it's difficult to underwrite for a pandemic. You never know exactly how that's going to play out. But I mean, just the fact that there's a level, even if it's just predictability, even if it stays neutral or if it's slightly up, I mean, it's still better than the 7, 10, 12, 15% increases they're getting with worse benefits every year in order to counteract that on at least on the fully insured merry-go-round.
Listen, I mean, I have a small group for my company, and just last year, 20 employees that we cover. And we fall in that category. We are a small business owner, and even with a 20 to 15% lower premium than the traditional carriers, with lower deductibles. Our deductible was $1,000, but we had a lot of people on the plan, and man, it was still $100K that year. Yeah, that's a big expense for a small business.
Oh my God,
And that's still with, 15 to 20% month over month than the traditional way of doing business.
Yeah. But I mean, it's just, there's a feeling of you've taken back control a little bit as well.
Yes.
Like you're not stuck on, like I described it as a merry-go-round or a hamster wheel, whatever you want to describe it. You're stuck on it, and there's a feeling of, well, I can't actually even do anything about it. So oftentimes, people will move to a new carrier. Oh, we got better discounts over here. They offered us lower pricing, and then you hop carriers. But then there's a disruption within the network changes and things like that. Or, well, we'll just raise our deductible to keep offsetting the costs, and all of a sudden you have a deductible that keeps people functionally underinsured because they can't afford the out-of-pocket expenses. And once you start going that direction, it's very hard to pull it back.
And not only that, but then you start going into the situation when you take away accessibility to your employee base, then you start developing chronic illnesses. Then you start impacting, the plan financially to treat these chronic illnesses. Then you start taking in the medication. I mean, not too long ago, there was a shortage, well, not a shortage of insulin, but it was difficult to get insulin here in the U.S. And you couldn't find it for less than $700.
Jesus.
But for a condition that could actually had been treated with the proper access to healthcare. So when you start raising deductibles, when you start raising maximum out of pocket, you have this fear in the population that they don't want to go in because they don't know how much it's going to be. And simple illnesses didn't start.
Well, I think that's one of the biggest things, negative impacts from the consumer-directed health plan is that the delayed onset or delayed care, pill splitting, whatever you want to call it, a number of sort of behavioral elements because people can't afford the care. They can't afford the early preventative care, or they're worried about going to a doctor for something small until it gets huge.
Exactly.
Now all of a sudden I've got a chronic condition, or I've got a humongous claim that I can't afford the out-of-pocket expenses. And it just becomes this really vicious downward cycle, man. And I think we're seeing the reality of years and years of the high deductible health plans and the HSA plans. They work for some. They work for wealthy people usually, or people that use it as an investment vehicle.
If you know how to use an HSA.
Yeah.
Right. Man, go for it. Put as much money in it as you can. You can even use it as an investment vehicle for your future, right? Because it follows the same tax rules as a 401k. But when you retire and you go into Medicare, you can access all that money for your health needs tax-free. So if you structure it right, but these are for more, I wouldn't say sophisticated.
Well, I would say, most of the people that are choosing those plans are doing because it's the cheapest plan available as well. Yeah, and so they don't want to have to utilize the plan, but they know they need something in the case of an emergency.
In emergency, we know we have.
It created lots of adverse selection, in my opinion, on those plans. But that's probably a completely different rabbit hole that I could go down for a while. But I do want to talk about your perspective as somebody that's come out of the other side of the pandemic. Your business is doing well. But the future of self-funding in general, right? We talk about some new solutions that are coming for the small to mid-market, but let's talk more broadly. What are you seeing on the horizon as the future of self-funding for these groups?
I do believe that self-funding will play a continual role in the marketplace. I don't know if it's the solution for everything. Okay. It all has to stem also from our administrations and what they do with ACA. But I do know that it's going to be continuous growth. That I'm sure of.
I honestly have no doubt you're correct about that.
With the PBMs, with the technology that is coming out, with the prescription drugs, the need to develop simpler and more effective drugs, that need is always going to be there, not only in the U.S. but worldwide. We have virgin markets also in Latin America that our model can fit, perfectly. But overall, if you take the healthcare umbrella, I do believe that we're heading towards more of a hybrid model.
Okay.
To where we give our society more access to primary and preventative services.
Okay.
Yeah.
So you think a public-private style hybrid is what you're saying?
So.
Okay.
Yeah, and I'm capitalist.
Yeah.
Okay.
I think everybody. We venture down this path. Everybody makes a point to go. Hey, well, I'm still pro-private. Private sector, pro-private business.
I'm capitalist.
Yeah.
Okay. I make no coup about that. But there's also this element about social responsibility. I do know that if we don't take care of those that are less than us, or they have less means than us, not less than us, they have less means than us, then as a society, we're going to see a decline. And it's not a good place to be as a society. I do believe that we need to have access for everyone, at least for the very basic level of healthcare. And when I say everyone, is everybody that participates in taxation in our country. Okay, I don't want to get political because everybody then starts mixing other stuff. I'm saying about those that pay tax. Okay, so we do need more access to primary care, preventative services, not only for our society, for their care, but it's a struggle to get family practitioners to stay in family practice right now. I think that the state of Texas will pay for your schooling if you actually stay as a family practitioner. And there are not a lot of takers.
Well, I don't doubt it. I tell you, I just got back from, you mentioned Scottsdale earlier, I just got back from Phoenix at the U-Powered Symposium.
Correct.
I would say the hottest topic that I heard discussed, I mean, there was a number of really important topics, but direct primary care was the one that stood out. I mean, I went to one of the sessions, and it was not in the main room, but it was in the side room that held probably about 100 people. And this particular session was standing room only. The whole back of the wall was out aligned, and it was a couple doctors speaking about not only the direct primary care model, but how physicians from the family practice setting could transition off insurance and go to that capitated model. And it was impassioned. I mean, multiple people in the back. It wasn't even like a question and answer. It was like, here's how it works, and this is what's going to, and this is what you should do. And it was fascinating to see it play out because I've had conversations with a number of folks in this industry recently, and it's like, that model makes a lot of sense.
Correct.
Turn it into a fixed cost line item, but control a number of the kind of lower tier preventative style routine maintenance things, but get it out of fee for service. Make it based on quality, not just drive them upwards in the system that to the more costly things. It makes a ton of sense.
Correct.
And maybe that could help with those physicians in Texas that are just going through this burnout, like we talked earlier. Hey, have fewer patients, but spend more time with them, develop relationships with them. You'll have a decent income, but you'll get off this whole, all the time you're spending billing and dealing with insurance companies and fighting. I mean, there's a better, there's a better way to do it. And I think that could potentially fit in that bucket.
If we take the example of Delta Dental, the network, right? It's one of the largest in the U.S., or it's probably the largest in the U.S. I was talking to a friend of mine, it's a dentist, and he was telling me that their reimbursement is one of the lowest compared to the other networks. But most, dentists want to participate in the Delta Dental network. And I asked him why. He's like, I know that if I submit a claim before 5 p.m. Central Standard Time, I'm going to get my money the next day.
Okay.
So it's about speed. It's about cash flow. They don't mind taking less if they don't have to deal with the headaches of repricing a claim and going back and forward and getting it rejected. They know, they've learned the system, and they submit the claims. What's
the same argument for reference-based pricing or RBR, reference-based reimbursement, is that, hey, I know that typically if you build it through the insurance, you might end up making X 60 to 90 days from now. Or what if I give you 160% of Medicare today and you'll have your funds? I mean, most of the practitioners would say, I'll take less if I get it today, right? And so there could be a model in which that maybe we lower the cost just because the providers are willing to take less money if it's quicker turnaround.
And it's interesting that you say that. Everybody talks about RVP, reference-based model. And when you hear the words reference-based pricing, a lot of people see it in a negative connotation, like, balanced bill, and it's going to happen, and whatnot. In these plans, I have to admit, companies like mine, we've done a disservice because we think that RVP is the only strategy in the plan to drive costs down. Well, it's not. Okay, it's just one piece of the puzzle to drive down costs. There's a lot of other things that you have to implement strategic to make that premium come down and to support the RVP. But for us, for example, all of our plans are RVP. Okay. It's not going to fit in every scenario, but for some, and a lot of them, it will. But it's just one piece of the strategy for the plan. It's not the entire strategy. We want to pay our vendors, our providers, quicker. We want to pay them at a more value base rather than reference.
Okay.
So we pay a little bit more because I want them to accept the claim in the first try.
Yeah, that makes sense.
When I have to now include human capital to go back and forward to renegotiate a claim, everybody's losing.
Well, no, everybody's losing time, wasting effort that could be spent, obviously treating folks on the provider side. But I also think if you pay a little bit more, it suggests to that provider, hey, we value what you do. It's not like we're trying to undercut your services. But we just believe that this is more of a fair price to pay for this particular procedure. And also, like you said, you'll pay them in a quicker manner as well.
And because we're a boutique TPA and we control every facet of the process, we're able to cut checks, ACHs right away.
Okay.
Sometimes we've actually done it to where we pay in advance.
Yeah.
So if
it makes a lot of sense to do it that way.
Correct. I mean, if we have somebody that's calling in for a pre-authorization, why not actually pre-negotiate right there and then? And hey, if it goes through, why don't we send you payment now and then do the surgery?
Well, there's a gentleman has a TPA in Oklahoma City, Jay Kempton, I don't know if you know him, and I remember he used this analogy a long time ago that stuck with me about buying a car, right? You'd never buy a car, drive it off the lot, and then wait till they send you a bill 60 days later. Like, oh, that's what I paid for this car?
Right, yeah.
The same sort of a process applies there. Why don't we pre-negotiate this procedure where everybody's happy in advance of the procedure actually happening?
Yeah.
And then at least the member knows what their responsibility is, the plan knows what their responsibility is, the provider's already paid. Everybody's happy in that equation, assuming the actual procedure goes well.
But you know what's the sad thing about that? A lot of the times when we try to pre-negotiate and come into an agreement, they don't even know where to start.
Yeah.
We'll ask, okay, ankle surgery. Well, I don't know. Let me call you right back. And then they have to go to their billing department and they have to figure all this thing out. And they're like, well, how about this?
Yeah.
They're like, okay,
Well, isn't that an interesting dynamic where providers don't necessarily know sometimes what they get paid? I mean, part of me goes, well, that's maybe a good thing, so they're not necessarily perversely incentivized.
Well, there's no standardized. There's no street rate.
Yeah. There's no menu of
there's
services.
whatever, yeah.
I mean, but that's why I like the bundled surgery model as well, because it's like your knee surgery will cost you $12,000 all in. Cool. At least I know what it's going to cost me, right?
Yep.
That I think just applying the same economic principles that the rest of our economy is based on, and applying them to our sector has been this pulling teeth forever. But I'm happy this is being talked about on a daily basis by really good advisors and companies like yours, just shedding light on the possibility of a better way.
Just ask questions, and get the. We have to educate the members. We have to educate our society. We've been conditioned to hand this little card over, and we're addicted to co-payments and deductibles. And And I'm guilty of it. My family is like, "What's my co-payment?"
Yeah.
Well, just pay cash. I said, well, no, it's embarrassing because they ask me about insurance. Like, well, it's not embarrassing if you don't, So I have to educate my wife sometimes.
Man, I'm guilty of it myself, man. But it is. The industry's done a really good job of training us the wrong way, or training them towards they're tilted in their direction. But I don't want to make sure, I know we've got a little bit of time left. I want to make sure I get on this topic because I think it's really interesting to me, and I think it'll be interesting to the audience. As an entrepreneur, you're also working with other advisors and entrepreneurs, and I don't know if you'd say a mentorship capacity or a coaching capacity, but tell me what you're doing there, because I find this fascinating. Successful people also needing a coach, you know,
Yes.
later in life, you think, like you told me earlier, you think, well, I got out of college, I don't play soccer anymore, I don't need a coach anymore. But tell me some of the work that you're doing there, because I'd love to hear about it.
That's something that I've always taken to heart. I've always had mentors and coaches in my life. I have one now. We work on a one-on-one basis. But because of the nature of our business, we come in contact with a lot of independent brokers and advisors. And they ask questions of, hey, how do you run a business? How do you become independent, right?
Mm-hmm.
Because it could be a double-edged sword. When you are in control of your time, and if you don't manage it well, it can be overwhelming.
Okay.
Okay. So you have to have a certain structure. So because of the nature of our industry, I find myself having these conversations with these professionals to where, hey, I have an agency. What do I do next? How do I go from becoming an agency or a broker to having a viable business? How does that look like? I am not the details guy, like I told you. Okay, in my company, I have the team that is taking care of me that focus on the details. I'm the visionary guy. I'm the guy that's telling you where we want to be, how we're going to get there. But then it's up to you to put all the pieces together and help us get there. But I still have that knowledge of actually helping individuals to put a process in place to where they can structure and organize their day so that they can have a strategy moving forward.
Yeah.
A lot of them will say, you know what, I'm running ragged and I need to bring in an administrator. I need some help. I was like, well, do you really? Or is it just a function of mismanaging your time?
Get a little more organized, like in your daily life. Yeah, yeah.
Put some more structure into it, right? Because it's an expense. Once you start bringing staff into the fold, it's an expense. You have to pay taxes. You have to do payroll. I mean, you have to report it. So you're adding more of a dynamic of an actual business than just bringing a staff member in. So the first step is, hey, let's figure out where you are first. Let's put some structure and prioritize your day. Let's actually, work an exercise of designing your life. How does it look like? What do you really want to get out of this?
Yeah.
Are you just independent because you just can't work with other people, or are you independent because you want to develop something bigger? And how does that look like, right?
So you work with them, and I think obviously a lot of entrepreneurs by nature are creative brained, right? So like they have the idea, they have the vision like you described, but they need a little help actually putting it into motion, just like you said, structuring your day. We didn't get into plan side, but I'll talk to you about this a little later. But Excel, if a broker builds a client presentation Excel, they literally have a blank canvas to develop anything they want, as creative as you want, and it's up to you to do it. We've introduced a little bit less of that infinite variability, but added some structure to it so it could be quicker, be more efficient. I see that application of what you're doing with those advisors, right? A little more efficiency. We're not all over the map. I'm kind of honing you in and getting you on a path so that your vision can actually be executed upon and you're not just sort of swimming in the ocean, treading water.
I had this advisor tell me, it's like, hey, I created all this activity and I just don't know what to do with it now. So she's got an opposite problem, right? I was like, well, I wish there was a lot of problems.
I wish I had too many sales in my pipeline.
Right?
Yeah.
But for her, she's got small children. She's got a husband. She's running her own agency. She's doing the marketing. And just playing Tetris with her and saying, okay, let's take all those areas in your life. Let's prioritize. Let's put your non-negotiables in place. Let's look at your goals. And then based on your priorities in life and based on your goals, in between are your sacrifices.
Yep.
Then you start formulating that structure.
Man, I wish we had another hour, honestly. And I genuinely mean that because I think, digging into the subject would be really fascinating. I love just the entrepreneur's journey, and I love, talking about how you actually get somebody to the point of building, having their vision come to fruition, right? And I just, that so is fascinating to me. But let's stop it here. I know you got to get on your way as well, but Closing thoughts, man. Jorge, just lay it on me, kind of a couple nuggets of what you'd like the audience that's listened this far to be thinking about as they go about their day.
Big one is just be intentional about your growth. Be intentional about designing your life and putting those priorities in place. It's okay not to be all over the place. It's okay. You know, you and I were talking about sometimes having to take a step back. Step back. It's okay if you punt, if that's going to win you the game. It's okay. So just give them that word to just say, hey, it's okay to take a step back.
Well, it's even maybe granting yourself a little bit of grace and just saying, you know what, you don't have to win every single time. You know, like you said, sometimes you don't score a touchdown, you punt, but it's actually the goal or the growth that you're working towards is winning the game. You know, so I think that's important, especially for the folks that are out there on their own, to understand is that, you know, we're all human beings.
Correct.
And you have to sometimes reset, you sometimes have to pause. And that doesn't mean you're a failure. It just means maybe that particular thing didn't work and you move on.
And you move on.
Yeah.
Yeah.
Well, appreciate you, man. A pleasure having you. Thanks so much again
Thanks
for
inviting me.
traveling.
I really appreciate it.
We'll have you on again soon, and we'll get into that other hour subject I was hoping to get into, man. But it's been great talking to you.
All right, sounds like a plan.
All right,
Thank
man.
you, Spen.
Bye.